You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out with the option block, everyone's favorite, at least I hope it's your favorite, bi-weekly source for all things options related. A little bit of options fun, some wit, some wisdom, some what's trading, a whole bunch of unusual activity, some of your questions, a whole bunch of strategery. Mix it all together with a peer into the future, and you got the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know the drill by now. Find us all the major platforms, like wherever you're listening to this, including iTunes or some of our partner sites, wherever you're listening. If you like what you hear, leave a review if you're so inclined. That always helps with the search and all the other fun stuff. And of course, if you really want to listen, you really want to join the hardcore crew, join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, MIXLR. And you too can listen. Why wait for the podcast? Do what the cool kids do and check it out live. And however you listen, live after the fact, hit us up, questions, comments, all that good stuff. We do, yes we do, like to hear from you guys. And joining me on the show today, I'm going to start in reverse order because we got a special guest in studio. Yes, he came out of his provincial hamlet, his water garden / pickle capital of the world known as St. Charles. He's actually in studio. I am looking at him in person right now. Hard to believe. Good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome to the big city, sir. What brings you down to our environs?
Man, they got some tall buildings here. Well, we got the RCM Christmas party tonight, so I figured I would, if I'm going to leave St. Charles, I might as well make it for a longer period of time so I don't have to leave on multiple days.
You should have wrangled Auntie Mike to come join you as well. We could have had a reunion of the Mikes, Auntie and Uncle Mike together here. Or he became Federal Holiday Mike towards the end, I believe.
Good point. Good point.
Well, I have a little surprise for you, Uncle Mike. In preparation for your appearance here in studio, I thought you probably want to do something special on the strategy block. So we put it out to our audience here. We did a little flash poll before the show. We said, Uncle Mike making a rare in-studio appearance on today's option block. What would you like him to talk about for an epic strategy block segment? We gave him a few choices. We said covered call strike selection. We asked him how to trade Skew, tying into your Skew fund, obviously. How to pay for put, something I know you do every day. Or wild card, submit your own idea. So far, excuse me, 57%, Uncle Mike, saying they want to know how to trade some Skew. So how does that sound to you, sir?
That'll work. I can't say I'm surprised by any means, but with our audience, Skew's always a fun, hot topic in this business. So unless things change, I'm looking forward to talking about the Skew.
We'll keep an eye on this one for a little bit. Maybe we'll get some crazy wild cards in there. You never know. But for now, the early voting is leaning heavily towards Skew. And a guy who I know probably likes to lean towards Skew a little bit himself. We are joined also, couldn't be bothered to make it in studio all the way from Maine. That kind of understands. A bit of a ways to go. It is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir.
It is a pleasure to be here as always. And you know what I just realized? There is a wood-turning chisel called a Skew. I mean, I know that, but those are the two Skews in my life.
A wood-turning chisel. We live in very different circles, sir.
I'm honored to be part of your. I'm honored to be part of your life by being the other Skew.
Yes, the wood-turning chisel and Uncle Mike. Those are the two Skews in your life. All right, with most of our Skews set and assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. Like the man said, this is the portion of the show where we break down what was moving, shaking, rocking, rolling, catching our eye in today's market activity. A bit of a quieter one compared to recent days and sessions where we saw big sell-offs and then big rallies and uncertainty and craziness and breaking news and everything else. Not as much of that today. Most of the major indices settling slightly to firmly in the green at the end of the session. S&P up about 0.2% or so, about 5 handles. The Dow and the tech-heavy Nasdaq up about 0.4%, so a little bit more, leading the charge to the upside. All that green means VIX cash taking a break to a nice comfortable range, 1030 so to end the day here, which is nice. Very close, I believe, in line to my prognostication for tomorrow's volatility views. So if we could just freeze it right here, I'll have to check. I think I was around 10 1/4. I'll have to go check. So that's a pretty nice, that'd be yet another bullseye. Does that freak you out, Mr. Rock Lobster? I'm so unerringly precise when it comes to this crystal ball, sir. It may be a little scary.
I am starting to freak out just a little bit, but the fact that VIX has been 10 every expiration now for like the last 30, I mean, even a broken clock is right twice a week.
Well, you're doing the old meatball trick, which is he just guesses the same thing every week, and once eventually he'll have to be right. He figures. Whereas I have been moving and shaking and being unerringly precise week after week. If only there was a VIX cash instrument to capture my unerring accuracy, then truly the fortunes could be made. Uncle Mike, I see you laughing here, sir. So
I'm looking at all the VIX short straddles on his trading screen here. It's just amazing. He is slinging those VIX short straddles like you would not believe.
The future is not quite as fun as slinging the old. I want the VIX up, VIX down. That's what I want, Uncle Mike and Mr. Rock Lobster, to really capture the true essence of the cash. The futures don't resonate with me the same way as the old cash. Of course, Uncle Mike, speaking of resonating, since you're joining us here in studio, we'll give you pride of place, sir. What's been resonating with you? I know you've been schlepping around the city a lot today and commuting and all that fun stuff, but what's on your radar for this fine trading day, sir?
Well, through the joy of mobile dedevices, you can pretty much see the markets wherever you go.
I don't know what you're talking about. What are these mobile devices?
I've heard of them.
What is this advanced technology you have in St. Charles?
Well, it's only for the high-end people, not the Dollar General people. The people that go to Five Below, the high-end snobs.
I like Five Below, baby.
You're one of those high-end snobs,
that's my
apparently.
jam there.
But today was these last couple days have been kind of interesting in that my beloved precious metals have gotten the royal tar kicked out of them lately. Thank God for hedges, as I always say. This could be a buying opportunity, but I would still wait a little bit more if you are not in metals and looking to get in them at this point. But nonetheless, that is what it is. The other thing that's kind of catching my eye, you had mentioned how the tech-heavy Nasdaq is up more than the S&P. The thing that really drove this market the last couple weeks, or the last week or two before we had this, I hate to call it I'm making air quotes, sell-off, if you will, to where we're only 1%.
I can see those air quotes. I can attest to them live here in person.
He can verify it. Before we had this major 1% sell-off off the all-time high, or approximately, one of the things that was really driving this rally was the financials. If you just take a look at XLF and how hard and fast it went up in a major hurry. So that's one thing that I think it's not off that much, but it's not leading the charge as it was. So I think that is one reason as to why we're not getting more of a broad-based rally recently. It's kind of just catching its breath a little bit because XLF has been, and just the financials in general, obviously, have been very hot, if you will. There's a little bit of a pullback in the Nasdaq recently, but appears to be coming back somewhat. I just think overall what we're looking at from the macro level is that we've had a major rally. The market's trying to pull back, but it really hasn't for the most part. So it's either, I personally think that it's either getting its legs for another leg up, or this is going to be a down leg, but I don't really see us channeling here for very long, even though we are going into the holiday season, or in the holiday season, I should say. I really don't see this being a channeling market. I think we're going to have some movement over the course of the next few weeks going into the new year.
You know, I'm going to ask you, with your precious collars out there, sir, and your metals taking it on the chin a little bit. Have you been doing stuff in these collars, or are you just kind of watching the put grow?
Closed a covered call recently. That's all I got.
these collars. Endless excitement, sir, in these 2-year. I'm so glad you put these on.
All the people in our studio audience are just going nuts here in the
They're
excitement.
going crazy. They love the collars and the lack of doing anything. Mr. Rock Lobster must be deeply offended. He's deep in the doing stuff camp, and so far how long has it been? 8 months or so you've had this collar on? Or
We've made like maybe 4 trades on it.
Yeah,
I figured I'd be making 1 a week, and I've done 4 all year how it's done.
You talk so much, you put this on. This is going to be the doing stuff trade du jour. 2 years I got to do stuff, and so far almost a year in. And
I think 4 trades legitimately.
not a lot of stuff has been done. We'll see if we can juice up something for you as the show goes on. Meanwhile, Mr. Rock Lobster, what is lighting it up? Excuse me, over there in the old pit chat today, sir?
Not a lot of washing. That collar, that Mr.
No, it's very dirty collar he has.
A very dirty collar. What is the resilience of the market? The fact that VIX is going back to 1024 and we have government shutdown, tax bill doesn't pass, blah, 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 and VIX is 1024. You'd think there'd be like a little bit more vol, but somebody pulled the plug on something today, so I'm assuming that there some news that had hit the tape about something in Congress that I don't quite know, but definitely feeling like that. So that was the big surprise. And then tech bouncing back a little bit. I think Mark was calling kind of the end of the great, tax selling unwind swap trade, and the vol went with it because we certainly had a little bit of a rally in the Q stocks. SPX didn't do a whole lot. I mean, it's up, but it feels like whatever everybody needed to do, they did, and now we're sitting here watching things go. So, and another thing about financials, I do think the vol in there is a little inexpensive relative to the crazy movement. And then the last thing was just Treasuries finally sold off after being bid all week. So I'm thinking the government shutdown isn't going to happen, but that's I'm just taking a wild swing at that one.
That's your diehard libertarian Main Street coming through of you over there, I believe, sir. You wear your stripes on your sleeve like you do your Skew all or whatever the heck that thing was that you referenced earlier here. Your woodworking tools.
It is a Skew. We'll save that
for this week in woodworking. Next up on the Options Insider Radio Network. Also with the Rock Lobster. Ironic how that works up. Let's look at some of the names that were lighting it up today. Facebook in kind of the rally home mode. People loving themselves. I guess some Facebook, all those concerns I guess people had not that long ago about, mobile ads not really selling for as high of a CPM as online ads and all this nonsense. This and, of course, Russian manipulation, all the other things that have gone on with Facebook. Apparently, brushing all that off, hitting 180 today, up 4 handles or about 2.3% out there. Options doing pretty well out there as well. All trading about 200 and over 250,000 contracts out there in Facebook today. About 1.5 to 1 calls over puts. And if that's not enough for you, on the flip side of that, well, actually, you think it would be the flip side, but actually on the exact same side, because also in selling off towards the end of the day after rally, and it was in rally ho mode for most of the day. And then, of course, I guess the end of the day, right before you started the show, it decided to turn. This was, of course, Tesla. They were kind of just bucking the trend because an analyst came out. I'm not sure if you guys saw this. They had the temerity to actually downgrade Tesla to a sell. Very rare that you see that. Who was this analyst? You know how much we like analysts on the show. I thought it was kind of funny. One of them had the courage to buck the crowd. This is Cassend Securities, my favorite analyst, of course. They're out of Palo Alto, so bear that in mind. They said they're facing increasing competition and production setbacks on the Model 3, and also more competitors coming into that space. So they put a 250 price target on it, 20% downside, and a sell rating, and a 20% downside over the coming 12-month period. I don't know, Uncle Mike, any Facebook or Tesla? I know Tesla's not. But either of these in the strategic night, and what are your thoughts about these things lighting up a lot of people these today?
Yeah, Facebook's definitely a long-term holding. But the other thing with Facebook, on the short-term note of it, on that dip, I tried to get into it and sell a put spread but I did not get filled. So I just missed it by about a dime. So this is one of the times that I was actually punished for being a disciplined trader. So for those of you that have ever had that happen to you, it does happen to everybody. It happened to me last week on the initial dip with that. In terms of Tesla, it's rare that you see an analyst downgrade of any kind. It seems like that, especially on something that is quite the darling like Tesla. Who knows? Maybe this guy's going to downgrade Apple. Oh wait, that'll never happen ever with anything. But I think that's surprising that they're downgrading it. But I'm not a fan of Tesla personally, and that I think for a lot of reasons we've talked about on this show. Although I would like to maybe sell some of those way out of the money puts we seem to talk about every day. But that's another story. But I think that Tesla just seems like I think it's going to explode at some point. So, heck, maybe I should buy some of those puts. So that's kind of where I'm at with Tesla.
Well, if this analyst has his way, 250, not quite close to the 50 that we always talk about here on the show, but he's getting closer.
Maybe he's expecting a vol spike in the 50 puts.
If it gets down to
he's being an insider. He's front run.
He's the guy who's really buying all those 50 puts while he's talking up all this downside here in Tesla. I like it. Mr. Rock Lobster, either of these names light out the pitch chat today, the old FBE or the old TSLA?
I know that Mark is a continuous, I love the Facebook trade. I think he has... I think he bought the 150 leaps for 2019 for, I don't even remember what he paid for them. It feels like they were $5 or something. So he's still riding that train. Likes that one.
Knowing him, he will milk that to death and never let us hear the end of it that he bought those leaps for.
So anyway, he still does. As far as I have been trying to figure out a way to make money in Tesla for a while, and I have a couple of clients. We've been trying to figure out a way to kind of do a juice for free backspread, and still have not quite figured it out. Mostly because it just defies gravity for so long. So I thought that as an interesting topic. I'm still trying to think of like put time spreads and stuff like that, but it's one of those things where I saw a tweet about it, that Tesla should get rid of Elon Musk as the CEO and just find somebody to run the company and let him go out and do all this, his good works around the world, putting batteries in and stuff.
Let him dig up Chicago with his tunnel to O'Hare.
Exactly. I mean, I think that's all.
Because that'll
happen. I don't know where Illinois is going to get the money. I think
he's going to dig up all the houses between here and O'Hare. Just there's no legal ramifications for that whatsoever. It's not like Chicago is known for bureaucracy or shady business.
It's cheap real estate too. That corridor between the Loop and
the entire swath between downtown and O'Hare. No one there really to protest.
Dirt cheap. Yes. So I would like to. Tesla's just one of those things where maybe the best play is buying the 50 puts and just seeing what happens.
See, we've been mocking, but slowly you're coming to the dark side. One of these days, Carmen Line, you guys are going to be sitting on 1,000 lot of those 50 puts are going to head your way, and then I shall truly and roundly mock you. We'll get to how many of those bad boys traded today. First, listeners, let's break down. We're a little late to the party. Usually we do it at the beginning of the month. We've had some active shows of late, so I haven't had a chance to squeeze it in, but we'll do it today. This is, of course, the numbers for November. An interesting month coming out of our friends over there at OCC, the Options Clearing Corp. They, of course, take the other side, the counterparty to all of your options trades out there. November, a little quieter than October, which was Rock'em Sock'em, but still a very active month, at least in terms of percentage, up and down. Only up 1%, but still the most active November ever in history for options trading. So it goes to show November probably a bit of a low bar, but still nonetheless. That's saying something though. Last year with the election, that and all that happened after the election, that this year still superseding it. Let's see, this year up 1% total volume in November to almost 397 million contracts. ADV so far up 4% in 2017, 17.2 million contract listeners. We'll drill down a little bit too because they clear a bunch of stuff outside of just the options. We obviously like to focus on the exchange listed options. That hit 385, almost 386 million contracts last month. Again, a 1% increase from the year before. Year-to-date ADV and exchange listed options up 3% from last year, 16.6 million contracts. Drilling down a little bit farther, equity options volume, 340 million contracts, up just fractionally, not even 1% from this time last year. So pretty much unched from this time last year. Cleared ETF options volume, 135 million, down 18% from November of last year. So last year, clearly election time drove a lot of ETF volume, and index options volume in November up 5% with about 45.5 million contracts. Also worth noting, they clear futures over there, mostly VIX futures. So this is mostly VIX. Cleared futures volume, 10, almost 11 million contracts in November, 6% increase from November of 2016. Uncle Mike, any of these numbers resonate with you? Surprising, not surprising? Or are you kind of like, eh?
Typically, I'd be kind of like, but I remember seeing the 1,000-point move in the Dow shortly after the election last year. So because of that, it does kind of surprise me that we have a little bit of an increase this year, considering we had quite a bit more news last year in November. So
I don't know what you're talking about. What happened last year?
I don't know. There was some voting thing. You had some poll on about who you wanted to be president on the show.
Right.
Or
Our Twitter
like
poll got big last year.
It did, yeah. So that was probably the main thing, but. So that's probably the main thing with which surprises me on this, is that we actually had more volume this November than last November, because I can remember getting many an email around 11 p.m. Chicago time on election night last year about why I'm not short everything.
I think that was probably part of the issue too, is that a lot of it occurred overnight, right? So a lot of this stuff wouldn't reflect it till the next day when it kind of settled down. It was still moving. But
true.
If again, maybe an argument for your much bemoaned after hours options trading. If we had that, Uncle Mike, I guarantee you last November would have blown the doors off
That's
this
a good
year.
point.
Mr. Rock Lobster, any thoughts here, sir, on these maybe surprising numbers?
Yeah, just a little surprising. I think maybe everybody was in too much of a shock last year. I mean, we definitely had volume, but there was a little bit that I believe, didn't we have there was a lot of sticker shock on trading. I think that's why we had such a big swing, because everybody just went and then didn't do anything for a couple of days, but the market went ripping. So, a little surprising by the numbers, but what are you going to do? What are you going to do? It's all I can say on that one.
I think what you do, sir, is you keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for the funky part of the show, not including the part where we introduce the Rock Lobster. That's always funky, too. Now, this is, of course, the time. I can see him taking umbrage already over there. This is, of course, the portion of the show where we break down what was weird, wild, whimsical, head-scratching that was lighting up our tape. Let's kick things off, as we always like to do. We were talking about Tesla earlier. Let's see if this sell-off noise, the stock ended up off 0.5% after being up a couple of percent, I think, throughout the day. Let's see if all that sell-off noise drove any action in our old friends, the Jan 2019 50 Catastrophe puts. Uncle Mike, I'm going to turn this, you can't cheat. You get to play along here because you're in studio today. If you had to guess right now, today, downgrade day, stock was up, then it's down. What do you think happened, if anything, in our beloved Catastrophe puts, sir?
I will say, just to be the contrarian on this, I will say they're totally flat.
That's not a bad guess. 10 contracts, sir. So you've been listening. You've been listening to this show you've been on for a while now. You know the game here. Well done. I can testify, listeners, he did not cheat. I turned the screen away from him, so he tried to cheat, but I wrestled the screen away from him.
I was looking at the other screen.
The other screen, yeah.
Yeah, I was looking at the other screen.
It is worthy of note, though, that the 50s didn't trade, but the Jan 2019 par puts traded nearly 1,000 today. So those things lighting it up, those things are starting to catch up. I'll have to do the numbers. I know the 50s are the number one open interest position, but the pars are probably closing in. The 50s have almost 35,000 open now, so they've added about 5,000 in the last month or so. And but the pars added almost 1,000 today, nearly 19,000 open on the par puts.
Some of us think must be short in the puts. Warren Buffett probably has a plan to buy it at like 98 or something like that.
There we go. That's him just selling all this stuff. Mr. Rock Lobster, is this you guys in Carmen line buying up these par puts instead?
We were thinking about jumping in. We were thinking about it. So I you know what? I'm just going to dangle out there for you. I'm going to let you dangle on the fact that we could possibly have bought 1,000 of those puts.
I think it was you. Let's put down that the Carmen line, folks, with Mr. Rock Lobster as the risk manager. He signed off on 1,000 of those Tesla Jan 2019 par puts, listeners. Put that in your pipe and smoke it. Since we're talking about weird things and paper doubling down, let's look back a little bit. We like to do that lately on the show. See some of the highlights, some of the things we've been talking about of late, and see how they actually panned out in the marketplace. I know you guys like it when we do that. We try to mix it in every now and then. We're going to look back to a couple of different shows. First off, we're going back to July. In particular, July 27th of 2017, where we had, looked like a bit of a call vertical with puts, so a nice little bullish risk reversal with the call kicker out here in JetBlue. At the time, paper sold the 19 puts in December and then bought the Dees 24-28 call vertical, doing the whole thing for a net outlay of 17 cents. At the time, back in July, it turned out to be probably some bad timing. Everyone always writes in saying, oh, these guys all know something. They have great timing on these trades. They obviously know what's going on. This guy had probably some of the worst timing. He put this in on the 27th. He actually did a couple of days. He was all right by a couple. If he had done a couple of days earlier, it would have been the worst timing of the year. He missed it by a couple of days instead. So instead of doing the risk reversal at the absolute high, he did it by about 2 or 3 points below the absolute high, at least for the year. The stock pretty much sold off almost immediately since then. It had earnings on the 24th. It hit a high of about 23.5, and then pretty much within a week or two later, it was trading for $18. So it got clipped pretty good. It bounced around the 18 level for a while, and just in the last, I'd say in the last couple of weeks, actually not even a little week and a half, it started turning around. It was trading 19 and change back on the 28th of November, and has been kind of in rally-ho mode ever since. Hit 21.5 a session or two later. Today, closing up a quarter, nearly $22, 21.87. It topped out, got as high as 22.36 back on the 4th, so just on Monday. This thing all of a sudden back in turnaround mode. So our friend, he's been sitting on dead money for a long time. All of these strikes still open, Mr. Uncle Mike and the Rock Lobster. So he put this trade on. There's still a ton of size open on all of these strikes. And all these options are also all no bid at a nickel. So he's pretty much lost everything on this trade so far. But I can see him there hoping. He's got a few weeks left, hoping that at least these 24s can kick in. So for all of you out there who write in and say these guys obviously know something, this guy clearly was on the wrong side of the train. Mr. Rock Lobster, we'll start with you. Any thoughts on our friend here having some poor timing in JetBlue?
Yeah, well, also too, you know the rule. He did it for a debit, so he's paying.
I knew that would upset you. I knew that would upset
that.
you. He paid for that shame.
Yeah, my gosh. So I don't know what to tell the person. He gets what he deserves by paying for his risk reversal. And another thing that's annoying about the trade is you sell the put, but then you buy the call spread. So from a trade point of view, at least I think if you're going to buy options, you want to make sure that if the thing rockets, you want to make some money. And the thing is, buying the call spread, the whole call spread was capped out. So, you're for all the effort and, the margin you put up with this, you're looking for, the 24 to 28 move. I guess it could pay on the net debit, but the margin was a heck of a lot higher than that. So, relative, it's just kind of a stinker of a non-performing trade. But you're right. At least it's not, a dollar to the bad. So all the only thing I can say is, but I don't think that was a very it was not constructed well given what they were trying to do.
So just to rephrase then, that you signed off on buying those par puts in the Tesla, but this 17-cent debit for this risk reversal in JetBlue, that would not fly past your risk manager muster.
It would not fly. Because where's your return? There's no return.
Exactly. Par puts in Tesla, that's where the money is, baby. I knew that debit was going to bother
They'll be a quarter
you.
higher in a week, I guarantee you.
You're probably right. They probably will. Scalping all the Tesla par puts you can. Uncle Mike, I can see you laughing over here. What are your thoughts here on this, shall we say, poorly timed bullish risk reversal here in JetBlue?
I'll put on my tinfoil hat and say this is just what they want you to think. That he doesn't know what he's doing. He was really short in a different account. So maybe it's that. That could be.
You're reading too much Zero Hedge, sir.
That could be it for sure. But no, I think that I actually wouldn't have a problem putting on a risk reversal if it were for a small debit and I knew it was far enough out of the money. This is, I guess, one area with Andrew and I where I guess we disagree. If it is for a small debit, I wouldn't have a problem putting it on. Just from the standpoint that now in terms of him doing it as a spread, I'm with Andrew on that one. If you're going to pay for options, at least give yourself the upside on that. But in this scenario, but with that, if you could put on a risk reversal and even if it costs a small amount of money, hey, I'll pay for it because I'm smart enough to do stuff as a wise trading guru I'd host a show with always says, if I can do stuff and make something out of the trade before expiration, that's what I want to do.
Well, you're too kind to me, sir. You heap me with too much praise. But I'll take it. I'll take it all. All right. Jeez. I'm knocking things over here in the old studio. I think we have a theme here on the Odd Block today. It's reviewing older stuff that's getting close to actually maybe paying off. We had our friend here who's got his fingers crossed at least those 24s. The rest of his trade he knows is pretty much worthless. He's okay with the puts going out. You wouldn't mind the 28s being worth something maybe. At least getting a little closer because that means the 24s are worth a ton. And that's what he's really waiting for. So he's waiting there. And also we have a friend here in UNP. This is Union Pacific. The going back all the way to February for this one. February 13th back on the show, we highlighted this one. It was a longer term, coming up due now, but long term at the time, nearly a year back then. It was a long-term vertical. Once again here, it was the Jan 130, 150 vertical, went up nearly 10,000 times for $2.22. There was size OI on this one. It went up. There was already 50,000 plus open at the time, so it made us think maybe it's closing, but it probably had the feeling like someone was piling on. Someone really liked that vertical and wanted to put up more. Well, as it turned out, that was indeed the case. In fact, a ton opened up and a ton continued to trade on that strike, because as I'm looking at it right now, we have nearly 100,000 open on both strikes, on the 130s and the 150s. So someone really, really liked this vertical in Union Pacific Railroad. And you know, they put it on back in February, and the stock kind of just sat. You know, the stock was much lower back then. It was 108 and kind of flirted around those levels. It seemed like a very aggressive level for a railroad at the time, you know, 20-odd handles within a year. It seemed like a pretty aggressive trade. And then slowly but surely, the stock kind of sat around, vacillated, and in the last couple of months, it started rallying, got up to 115, sold off a little bit again, and then the last couple of weeks, again, similar narrative to our last trade. All of a sudden, it's going from 117 all the way up to 120. It got up to 132 even briefly a couple of sessions ago. So all of a sudden, Union Pacific just off to the races here again, and all of a sudden these calls looking pretty good. Like I said, there's a ton of OI. It's all still open on these strikes, so 100,000 or so. This spread right now, he put it on for 222, that trade we talked about, trading for about $3 right now. So it seems like Mr. Rock Lobster, this friend here, is being rewarded for his patience with some decent dollars. What do you say here on this vertical coming due here in UNP?
As I recall, I thought this was one that we giggled about way back when.
Yeah, it seems silly. 20-odd, almost 30 handle rally in a railroad, really?
What is it? Doesn't Warren Buffett own a lot of UNP? He owns one of them, or does he own all the railroads? It's hard to know because he just owns everything.
He owns all the slots on the monopoly board for railroads.
I guess so. So he owns all 4 railroads. I'm not thinking he's
$200
buying
every time you pass go, sir.
I'm not thinking he's buying those call spreads. However, one thing about buying calls, I think it's better to err with more time than less time, because the model is more friendly to those calls, and especially now that they depress everything in general in longer-term options. So all I can say is somebody, if that was a 3-week trade, it would have been dopey, but they said, okay, well, 10%, not 10 to 15% is not crazy for UNP. And at least for right now, they seem to be right. So, but if you want to buy calls, longer term usually is a better bet.
Yeah, it was about 108 when that trade went up. So he needed about a 22 handle rally for this thing to pay off in the course of a year. And he got the better part of that in the last couple of weeks. I guess it's working out for him. Uncle Mike, what are your thoughts here on this long-term vertical seemingly coming due here? It's still open, so he hasn't taken it off yet. So I'm not sure what he's waiting for, but he wants more.
Well, a couple things on it. I think the first reason why it's gone so well is that word got out that I'm coming into the studio today. I'm on the Union Pacific West line, so
that's what it was right there.
That's probably
it all is in the last couple of sessions, so word clearly leaked. You gotta keep your travel plans closer to the vest next time.
That must be it. Yeah, just we haven't done Krispy Kreme on this show in a while, but that's another story. But no, I actually do like. I've had long-term verticals in the past. I don't have any on right now per se, but it's something that will likely be in my toolbox as I ramp up some of the longer term trades for the coming year, either at the end of December or January. But I do like that. It's one to where if you like a stock, I think from a risk reward standpoint, if you want to take a shot on something, I really enjoy. I really think it's a good trade to do if you have a very bullish sentiment on something and want to take a shot.
Speaking of taking a shot, someone kind of took a shot in the terms of drawing a line in the sand. I think this is one of your favorites back in the day, Mr. Rock Lobster. This one happened back also that same day, February 13th, an active day on the show. We profiled someone drawing a pretty sizable line in the sand over there in Amgen. At the time, it was a little distant, though. The stock was pushing, it was about 168, and they were writing a bunch of puts on the 115 strike. So they weren't exactly taking the bull by the horns there. They were blasting out. We kind of more liked them for the size as well as just the kind of the silly price. Blasting out a bunch of these puts for 4 cents over there on the Philly. I know Mr. Rock Lobster loves those. Actually, they were about a nickel bid, almost 4 cent bid at 9 cents. So they traded a lot in that range. And it didn't seem like the most aggressive of put sales, but someone was clearly drawing a pretty decent line in the sand saying, you know what, if it dips that far, I will courageously step in and buy some 50 odd handles below where it's trading right now. And it turns out, quick glance at where the stock went. These went out in April. The stock never even came close to the 115 strike. So our friend here, not quite as valiant as perhaps it first appeared. It got down about as low as, about not even, by April expiration, it was trading 160 and change, so it hadn't really moved much at all. If he had held on to these for maybe a couple more months into early July, he might have been sweating a little bit. Looks like this might be a bad print. I don't know. It looks like there was a crazy print in Amgen from 172 all the way down to 84 back on July 3rd. That could be a bad data set I'm looking at here. But if that was the case, he probably would have been sweating those puts a little bit. 115, a little bit meaty. Mr. Rockloff, to take us home on you love these line in the sand puts, and our friend here who drew the not most courageous of lines, and he ended up keeping this 4 cents.
As I recall, this could be like a stock buyback or something from the Amgen company. Like, okay, if it gets down here, we want to load the boat because we have to provide equity to all of our employees. But like, it's another one where what is the margin on that trade? What is the return on the 4 cents? It boggles my mind. Are you not boggled? Or you have to tie up all that margin for 4 cents? There's a flat spot on my head banging against the wall trying to figure out why you would sell these things. But I guess they wanted, to take the stock down there. But holy guacamole, that's still $50 in margin at the strike. So what's the return on that? It's like blah.
Size dollars, baby.
That's one area to where I have to say that I think just if you really wanted the stock at that price, I think you're better off just with a limit order if that's the case. That's one of the few times that I'm typically more for selling a put to get into a stock, but that's an area to where I think just put in a limit order.
Yeah, the 4 cents may look tempting, but you're not keeping all that 4 cents, particularly you talk about margin, all the other fun stuff. Just to recap here, by the way, if you're trading at Carmen Line, listeners, then you can buy Tesla par puts, you cannot buy bullish risk reversals in JetBlue, and you cannot write out of the money puts in Amgen. Have you got that down right, sir? Is that pretty much how it works?
I think you're kind of right on that one.
There you go.
And we'll see what those Tesla puts pay.
Size money, baby. Speaking of size money, Uncle Mike's about to teach you how to make some of your own right now. It's Thursday. It's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. This is, of course, the portion of the show where Uncle Mike usually takes the reins from his HQ there in St. Charles. This time, he's taking the reins live from the studio. It's very, very fun, Uncle Mike, to have you here in person. So go ahead, sir. The floor is yours. I'm checking in here on our poll that just kind of expired, our little flash poll. We asked you guys, what would you like Uncle Mike to talk about? Covered call, strike selection, how to trade skew, how to pay for puts, or the wild cards. And with, I think it's pretty much done, 50%. So a little ebb and flow there towards the end. It was 67%, down to 50%. A little last-minute flurry for the puts. How to trade skew, Mr. Uncle Mike is our winner with number 2, how to pay for puts. Number 3, 17% covered call strike selection. So have at it, sir. The floor is yours. How do you trade that skew?
Well, there's a lot of ways with which you can trade skew, and today we even learned that woodworking is part of a skew thing. So how to trade skew, we could probably...
I'm waiting for that woodworking and skew web. I think a lot of people are going to be very confused dialing into that one. I'm just going to go out on a limb and guess that.
I'd listen to it. I'd love to hear about that. But skew is something to where if it's like how to trade volatility, and that you could probably have... semester-long course just on that subject. But what I'll use today for is I'll talk about how I trade skew and how things can work. So for those of you people listening at home right now, go ahead and take a look at, and I'll just give you one of them that you can look at for the time being, is Facebook. And if you go out roughly to the furthest out you can possibly go with Facebook, you will notice, at least as of earlier today, this might be different now, but you will notice how Facebook, the calls are priced a little bit more expensive than the puts. Meaning, well, it could mean a lot of things, but theoretically, what I think it means is that there's so much excitement for Facebook that there's just so many people buying all these call options, and that the puts are just relatively imbalanced in such a way that they're cheaper. So a way with which, and this is from the most simple ways of doing it, if you look at an at-the-money put option 2 years out, and you look at a call option about $5 out of the money, it's going to be at a similar price. You might even get a credit for it. Once again, I'm at the studio right now. I'm not in front of my trading headquarters, but nonetheless, this is just kind of one example of it. And the way with which you can look at this is that you can say, okay, I want to have the opportunity to own Facebook, and I want to have little, if any, risk on this. And by doing that, you buy the put option, now, of course. And then full disclosure, I have some of my clients that are in this trade right now. You want to have some upside to it as well. Then by selling the covered call out of the money at the same price with which you bought an at-the-money put, you're actually getting a free ride on Facebook for $5. Now, I know that you're probably thinking, well, Mike, $5 on Facebook, I have to say, over the 2-year period, that's less than exciting. But, you might even be able to do it for $10. I'd have to look at the actual screen to see what it is. But my point is that with the skew, there's so many more call buyers out there right now. And if you're a call seller in an environment of call buyers, that can be very beneficial to you in that you are actually being able to participate with little, if any, risk. One of the things that we do at RCM and in our skew fund that I mentioned on the show a couple months ago is that we look for stocks like this, and a lot of the FANG stocks typically have something like this. Facebook is one. Apple can have one if you want to factor in the dividends to it. So there's a lot of them with which you can take a look and see how this skew actually exists. Now, to add to that, and that's one of the ways with which I like to look at the skew. Now, another way with which you can do it is in the reverse commodity skew. For example, in the commodity world, there's skew there, but my opinion, for different reasons. The reason is that typically in the world of commodities, if something bad happens, they rise. So all of a sudden, if, this is kind of laughable now, but I always used to say when I'd give this example years ago, let's say we had a threat of a nuclear war, then commodities would probably rise sharply. Well, we have threats of nuclear war all the time now, and no one seems to care anymore. But let's say that we actually really did have some type of real threat or something really bad happened. What that bad thing is, I don't really know what to say anymore, but let's say we did have the threat of something bad happening. Theoretically, commodities would increase sharply. So because of that, the call price in a commodity, SLV, for example, we've talked about before on the show, they're typically higher than that of the puts because there's more fear of the commodity increasing. Now, if you look at this on the S&P, as the market as a whole, puts are typically more expensive than calls, meaning volatility is higher on near-the-money puts than on a near-the-money call. So if you were to go 5 points out on the SPX, or let's say even 10 or 15 points out on the SPX, both to the call side and the put side, typically the put is going to have a higher value than the call. A lot of that, the reason for that is that there was a lot of fear in the marketplace that happened after the crash of '87. So since then, that skew existed, and there's ways with which you can look to trade that. Now, it doesn't exist quite as much on individual equities because because individual equities can have a melt up, so to speak. If all of a sudden a pharmaceutical company were to find the cure for cancer, that stock's going to increase immensely. So it's not quite as much of an existence within an individual stock as it is on the market, but typically the market's not going to have a melt up like an individual equity could. So the final thing that I'd like to say with this in terms of skew, I can remember probably about 11, 12 years ago when I was working at Options Express, and as the director of education, I remember, I almost did, I'm kicking myself for not doing it, but I remember being able to do a trade similar to what I'm describing on Apple. It was about a 1 year out option trade. I was able to buy an at-the-money put, sell an out-of-the-money call, and the risk reward on it was 0% to the downside and roughly 8% potential to the upside. Now, why was that so much more prevalent back then? Was it because of the fact that there was so much more Apple mania back then? No, I don't think so. I believe the reason is because of Roe. When we had higher interest rates, we had more of a skew if you combined with companies that had more call demand than put demand. So bottom line in terms of how to trade skew, a couple ways. First way is you can take a look at the reverse skew that exists in most commodities. SLV is a great place to start. There's a lot of different ways with which you can come up with different strategies for yourself. And if silver starts moving all over the place again, then I'll have plenty of updates on it on this show. But unfortunately, that's kind of been the ultimate letdown of this year.
You've been the kiss of death for silver activity. Once you put that collar on, sir, it squeezed all life out of it.
It totally did. It totally did. But that's a great place to start, just to take a look for the skew. Another one is another place to look are on stocks that are kind of the darlings of the option world. Once again, Facebook is one to take a look at. Not that I'm recommending it, but full disclosure, we do have exposure to it within client portfolios. And a lot of the stocks that can do no wrong, so to speak. Amazon would be another one to take a look at. And there's a couple others that exist as well. If anyone's interested in what we're looking at, feel free to give me a call. I can tell you on that. Just take a look at those. Look at them, play with them, and see how they can possibly work for you when trying to look for the differential in the call prices and put prices. And that is non-woodworking skew for today.
Yeah, Mr. Rocklofter, he was very bored. He was hoping you were going to talk about proper skew technique when you're planing that wood for the first time there with it. But he didn't get what he was after. I think the rest of us did, Uncle Mike. Always fun to have a live one in studio. Speaking of live, we got a few more minutes on the show. Let's see how many of your questions we can answer live. All right, let's get right into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the name implies, this is the portion of the show where you guys take the reins. Everyone, I don't know if you guys know this, but people are kind of up in arms about Bitcoin. They like to talk about it. They have questions. They have comments. Also, we're closing in on the Bitcoin futures era, a couple of days. By the time we have our next show, there will be live Bitcoin futures trading. Sunday is when the CBOE goes live. The first real full day of trading is Monday. So the era is upon us, gentlemen, whether we want it or not, it is here. So we thought we'd ask you guys, all this heat's coming. CME announced they're launching on the 18th. CBOE says, wait a minute, we're coming on the 10th. So we're going to steal a week on you guys. And then Nasdaq says, hey, don't forget about us. We're going to have futures too sometime next year. Q2 of 2018 is their planned launch date. So you got a lot of choices. So coming up into the new year, how will you folks trade Bitcoin? We asked you guys. We gave you 4 choices. The CBOE Futures launching on the 10th. The CME Futures launching on the 18th. The Nasdaq Futures launching sometime in Q2 of 2018. Or we'll term it old school Bitcoin, which is the way you're doing it now if you are slinging it. Let's let Rock Monster come in. Let Uncle Mike take a bit of a rest. Mr. Rock Lobster, what are you feeling, sir? What is our audience feeling? And then if you have a choice, feel free.
I still think The CBOE will be the first one, and that's what I pick and what everybody's going to go with. I feel like the first one out of the gate is going to be could be the winner on this one.
Really? Just that 8 days is all it takes.
Yep, that's it.
I will say, when CME made their announcement, it got a lot more headlines, it seems like. But for whatever reason, CBOE going first, so we'll get to see. They get first mover advantage. Uncle Mike, I'll turn my screen so you're not tempted to cheat. What are you feeling, sir, with our audience?
I'll go with the CBOE for the. I'll agree with Andrew on this one. CBOE. I'll go with it because of my years of loyalty of doing events with CBOE. Although I did do a few of them with CME, but so I guess I shouldn't say too much against them. But did a lot more with CBOE with Marty and Jim and the gang. So I'm gonna go with the CBOE.
Our audience is going that way as well. So far, 44% saying they're going to go with the first one out of the gate. They don't want to wait another 8 days. They've waited long enough, darn it, and they're going to go. So 44%, 33% coming in for the CME product, 19% saying they're staying the old school way on the old Coinbase or whatever their platform of choice is, and only 4% wait until Q2 of 28. I'm surprised they got that many, quite frankly, because it is kind of just a Me Too announcement for now. There's no real specifics on it yet. All right, let's see. We got time for a couple more here. Uncle Mike, here's a weird one that just came in. Maybe this is up your alley. You're our macro man. And you're also our default tax guy because no one else here wants to talk about it. Scott Summer wants to know, how would movement to treat capital gains to FIFO, so first in, first out, for the underlying stocks be good or bad for the options market? Have at it, sir. All yours.
Oh, good gosh! My accounting teachers my college accounting teachers are listening right now with bated breath on how I'm going to handle this one. No, with stocks in terms of FIFO, for those of us that are not accounting people out there, there's FIFO and there's LIFO. There's first in, first out, and then LIFO is last in, first out. So that means, let's say that you were to buy 100 shares of stock, and you were to buy 50 shares on one day, and then you were to buy 50 shares on another day. For the first in, first out, that would mean that if you were to sell 50 shares of the stock, then the first 50 would be taxed. So let's say you were buying it on the way up. In theory, you would pay a higher tax for it as you were doing it. So that's the theoretical as to how it would work. In terms of how it would be good or bad for the options market, I think it would be more dependent upon whether or not we have a bull or a bear market in terms of how that would work. So if we had FIFO on capital gains for stocks, not quite sure how it would affect the option market directly, but I think the main thing that you'd have to look at is that, let's say that in theory we had a bear market, then what that could do is that could motivate more selling. And by motivating more selling for people to get the tax loss on the stock if it were going down, so that's one area to where if someone could claim a tax loss, that could be kind of like a tax break in some ways. But if we had a bull market, then it could encourage people to want to hold on a little bit longer because they don't want to take the tax gain right away because they bought at a lower level. So to answer your question, Mr. Scott, I think it's based upon whether we have a bull or a bear market.
You're never going to come in studio again because you get the gift of answering the tax questions for in studio. You're like, I'm never doing that one again. Mr. Rocklobster, he's hiding virtually. Mr. Rocklobster, anything to add on our pressing FIFO-LIFO debate here? Is this?
I like it.
I'm getting shades of your vertical spread question again.
I want to just please give me the SPX call spread. Let's talk about Skew. But oh my gosh,
FIFO.
That's why I have an accountant. That's all I.
We found the banes of Andrew's existence: vertical expirations in the SPX when they're cash settled. How does that work? And also anything FIFO-LIFO. There we go. We know that. So now, listeners who are in the pit chat, you guys know how to tease him mercilessly. All right, good questions. We'll have more on Monday. I'm sure a lot of you guys probably hitting us up about how these futures are trading on Monday, so we'll see. Meanwhile, we got to keep on rolling. We got a long one here from no time for that one. We'll get for that on Monday. We got to keep on rolling into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome. Uncle Mike's still laughing about that tax question. He's totally never coming in studio again, listeners. I've scared him off. All right, welcome to Around the Block. This is indeed the portion of the show where we break down what we're watching for the rest of this week. I think a lot of people are going to be waiting with some bated breath for this Sunday to see when the rubber actually meets the road for these Bitcoin futures. I mean, it just hit it's pushing 15,000 in the actual underlying. One of the problems with the underlying Bitcoin, though, is that you can't really effectively short it. I mean, you can, but it's an obtuse, and it's not really. And a lot of these outlets, these quote-unquote exchanges that currently trade it, they have limits, and if you want to hit a bid, how much you can actually sell. Some of them are as small as like 10,000 notional. So I mean, you're talking like not even a full Bitcoin anymore. So that's been certainly a contributing factor into how much this thing has run up. Now you have an actual opportunity to actually hit a bid, maybe to do it with some size. That will be interesting to see. I think we'll also all want to see, too, how these underlyings actually hold up. I know less about the CBOE Gemini index than I do about the Bitcoin reference. So I have to dig into that one a little bit, see exactly what they're measuring there. But interesting stuff. So that's kind of what I'm watching. Mr. Rock Lobster, anything else you got to add to that list?
Not necessarily adding to the list, but I think that I'm going out on a limb, and I have no stake in this fight, whatever, but I do think adding the Bitcoin futures should take some of the vol down a little bit, because at least it presents an avenue to sell. So I'm just going with that as far as what to watch. And don't we have a jobs number this week, or am I off on my week? What's today? It's the first.
Oh, it is the first Friday, so technically that should be the case, right?
Yeah, I think we do have a little jobs.
Who cares about that? You know, whatever. It's Bitcoin futures, baby.
I'm wondering if they're ever going to actually raise interest rates again, because I'm still looking for the recession, and we have 1% interest rates. So is that ever going to happen?
I guess.
I guess not.
I guess not. Ain't gonna happen. You're safe in Maine anyway. What does it matter? You have your own currency up there with wood and whatnot, so you're good to go. You don't these vagaries of the economy down here for us lowlanders. You don't have to worry about it up there. All right, Uncle Mike. What's on your radar for the rest of this week, sir?
Well, I mean, I'm definitely going to be watching Bitcoin when it comes out. I think it's going to be real exciting to watch, and I emphasize the word watch. I am not touching it at this stage.
Breaking news, strategic night, all in on Bitcoin futures on Sunday.
Well, just because of the fact that I've had so many clients call me on it with one opinion or another, and I just want to become well-informed and well-educated. So aside from that, just watching markets in general and the usual things.
Nothing usual about this week, sir. It's all craziness on the horizon. Unfortunately, that music, listeners, means our crazy tour here has come to an end. What a tour it was. Went to Tesla, went to Facebook, went through some OCC numbers. What was going on this last month, really, in the world of options? We freaked out Uncle Mike with some FIFO. He educated us on some Skew. We freaked out Mr. Rock Lobster even more on the FIFO. That was pretty fun. We have to have a question. Listener, someone craft a question out there that involves vertical spread expiration in the SPX and also FIFO. And then we'll truly have found his kryptonite. But before we go, listeners, let's go back around the horn one last time. Let's make up for Uncle Mike for giving him the tax question for coming all the way in. He gets to go first. Uncle Mike, if I was intrigued by what you talked about earlier about, let's say, that Skew thing, and not the woodworking version, the actual version, what should I do? Where should I go?
Hey, if you want a financial advisor that's not afraid to talk about option skew and tax laws, including FIFO and LIFO, and if you give me the chance, I'll even talk about NIFO at some point, next in, first out. Give me a call, folks, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
Okay, now you're freaking me out with your NIFO. That's you're bridged too far, sir. You've gone too far. All right, Mr. Rock Lobster, if you'd be covered from your tax terrors, sir, what is cooking in the land of the pit aside from your woodworking classes?
Besides the woodworking, we have VIX Made Easy starts next Thursday. Go to our website to find the free webinar that will set you up for the next 4, and you can trade VIX and actually understand it a little bit as opposed to just watching Bitcoin run around in 1,000-point ticks.
But that's fun too, right? So we shall see. The next time we convene, listeners, Bitcoin will be live in an actual listed derivative product. So we'll see what that's like. I'm sure you'll have some questions. A lot of you guys asking about the options. No real insight into that yet. We got to get the futures down first. Then we can figure out the options. Let's do one for the other. And everybody have a good rest of the trading week. If you're listening live, make sure you join us back tomorrow, Friday, noon Central, 1 p.m. Eastern for vol views, and then 1:30 p.m. Central, 2:30 p.m. Eastern for TWIFO. I got a feeling we'll be talking about Bitcoin on one, if not both of those shows. Because guess what? Both CBOE and CME both have products coming up in the next couple of weeks. So I'm guessing they're both going to want to talk about that. So we shall see. Stay tuned for that. If you're listening after the fact, then you can listen to those wherever you find your favorite podcast. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.